Okay, Friday. So let's take a look at the market. This is gold. Okay, so we had a bit of a fun with this last night. Yesterday, that is. Remember, I got in twice. I covered the trade. I got stopped out on the pullback. And then I went in again here, covered the trade, got stopped out again. No loss at all yesterday. And the third time I could have and I should have maybe, but I was at the dinner table, because I can't trade 24/7. It's like not possible. So I was just looking at the times when, I could. But, I was at the dinner table, so missed out on this one. But if I had entered again a third time, the trade would have been covered and we would have gone to that target, 2,777. Remember that target from the weekly PST, and that's your bingo, 67, 2,778. And there you go, 2,778. Okay, nice and easy. So if you followed that through, well done. Oh, funny. Funny it is. So let's see what we've got. Now, gold yesterday was a swing day, okay? So obviously that didn't turn out to be a swing day at all, all right? Just turned out to be another breakout day. Okay, remember we had a breakout swing day, but that was anticipated. Remember, we were anticipating that, and we talked about that target, and I said this is a place where the market should get to because we have a gap, and we've got to, fill in, and the market broke out. So, it was all obvious that we're, going up into that direction. This is why yesterday I also wanted to buy. Okay, so, tried on both occasions, hoping to go up, but I just sent out a video, sent out an email on that as well. It's a good case study, actually, how you can get into a trade, keep getting into a trade based on time and price, and when you getting your trades covered with the same amount of stop loss, and your stop losses are really, really tight. You're just not making any losses, and you're not, getting, ticked off and upset about what the market has done, really. Okay, well, that's how it is. Well, anyway, let's see then. Now, today for gold, we've got a bit of a drama happening. If you are looking at the timing, you will know specifically for gold, and if you check it according to the London Gold Fix, you will have at 5:50. Okay, a relevant hour. So if you're trading gold, just make sure you got the hours here, right? So it's 4:55. This is probably going to be the trigger, but 5:50 is going to be important. But I'm thinking this is probably going to be the trigger for it. So this will probably be a time when the market may, if at a high, might be looking to sell off. Okay, and if that does happen to be the case, then it should kind of retrace back into towards the closing. All right, so be mindful because that's going to be strong. Okay, it's a short-term one, but still strong enough to push us down. So be mindful. Okay, let's take a look at what we can do with that on the daily. If that is the case, we've got good buy case at 2762, 74, 2764. So 276264 is going to be there. Okay, so we should at least dip down into there, and the market may keep pushing up afterwards as well. But like I said, if we're up here somewhere in those hours, those US hours, then a pullback is in order. So that's how I would treat it. Now, normally I don't trade on Fridays, okay, and it's not a swing day for gold today. So on both occasions, the swing days for gold turned out to be a breakout push kind of day, and that's fine. Okay, why? Like I said, it's because we're anticipating. So this is the Thursday. Okay, so, well, actually, you could say this is a swing day because we had a good dip down to push up, but there you go. All right, so Friday, Monday, Thursday, swinging into Friday, coming to the target, and that's like I said, it's a good kind of level to take your profit and run, because this is exactly the level that we were hitting and waiting for. All right, so take your money and run. Let's take a look at euro dollar. Euro dollar. Okay, so we still have a bit of room to go. Yesterday also the market dipped down. Now look at that target 62. So 1.0456. That's your 1.0456 today. This was from yesterday. 1.0456 is there. All right, and that's pretty much done. The reason being, this target probably changed. Let's see if that's also from the weekly. Now with the euro dollar, we had a good run with the euro dollar, as you know, this week. So I'm not really complaining at all. It was a good follow-up on Tuesday, and we're anticipating to come into here, same kind of setup as with gold, okay, as you know, and we've got even highs here, so this is bound to get swept, okay. And if we take a look at the weekly, we've got room to go. So Friday being a swing day for, no, is it just, yeah, it should be. Friday is a swing day, correct, right, for gold. So we should be making a high and probably ending up with a high. Okay, so somewhere probably in this zone. All right, and that's basically it. And look, yesterday market buys at 52, 1.0381, 1.0371 is there, 81. Oh, that's 814 today. Sorry. Remember, that's the daily, okay? That's the daily. And this is going to change every day, okay? So yesterday, it must have been 7-1, and that's why I put 7-1 yesterday. And look, very nice. Beauty. Okay, so beautiful. Right on the price as well. That's like, wow, pretty cool. Okay, so this is why PST pricing, and obviously your timing is going to be working out fine. All you've got to do is just follow through. So with the euro dollar as well, we should have a pullback, selling the highs at trading hours to come back down here is okay. This is a resistance level, market sold here, and this could be like a high, so we can retrace next week. If we do retrace next week, the market will have room to go as well. So stop sweeping and then hanging down is not a bad idea. It's all good because we still have a bit of room to cover here. The market going up actually is a good thing for us. Remember the impulse wave, 1, 2, 3, 4, 5, and then we have a big ABC down. It's going to give us a good opportunity to buy, and then we're going to hit back up, and that will be the first wave completed, and then we can be in wave 3 until kingdom come, and that could be like all the way up into there, okay, and then doing a 4 and a 5, matching that high before an ABC pullback. So this could really be a great trend to start, which I think that's how it's going to be. So getting ready for that setup is not a bad idea, okay. So in the meantime, on a Friday, what you can do with this is, like I said, if you want from the highs, you can sell off because there's a gap to fill here. You just need to be careful. In any case, the market's going to pull back, so I wouldn't be stubborn and keep saying to myself, oh, it's going to close the gap, it's going to close the gap, so let's sell it off. Don't be too stubborn, because the ABC retracement later on will. So, okay, the market doesn't necessarily have to do that. So be smart when you're trading, match your time and price. Your price here, like I said, is at 1.0456. And if it breaks above it, closes above it, just don't stand in front of it trying to sell it. Don't do so. If the market comes back in, closes this gap into a trading hour, let's say in London, okay, and you want to go up with it, it's logical to do so. Other than that, basically, yeah, if it breaks out, don't stand in front of it. Let's take a look at SP 500. Now with the SP 500, Friday, swing day, nice and easy here as well. Nothing to really worry about. As you know, this was we had a swing day Monday, Tuesday. That's your Tuesday, Wednesday, Thursday, Friday. Okay, so we're all good. We're all happy chappies. I hope you guys had a ball. All right, what to do with it now? On the weekly, we still have room to go. That's nice and easy, pushing all the way. And I did say Trump would be talking nicely, and that's how you go, market. Just going up, breaking out on the trading hours, and just following all the way in there. So that's exactly how things panned out. All right. So the important thing here was, I'll tell you what, sometimes when the market is high, it's like tricky to sell. But if you're at, a price where we're expecting like these levels, which I, drew yesterday, I put these lines in. So if the market comes back, it's a trading hour, you can go in. Why? Because we've made a retracement. We're going to go kind of up. Or you see here, look, this is a trading hour. And the market breaks out. It just goes above it. The reason we have these lines are important. On your 15-minute chart, this white line, like a ladder, it is important because this is the price where the market is happy, okay? And if it's pushing higher, breaking above it, and we've got an upwards direction, right? Our bias is to the upside. Then you're thinking, okay, now we can be even happier with a higher price. And your first target would be the high of the previous, and that's higher the previous, coming in at the trading hour again. So you got your trade already in TP1, and then your upper PST targets, which I put in yesterday, you're all done with them as well. You easily take profit at your second take profit and just let it go and get out. So with today, we're probably going to have on Friday, you're going to have to wait till 5 o'clock. Also, if you are trading indices, this up move is not a surprise, because if you've watched if you calculated your timing, you know that towards the morning, like 6 o'clock, this is okay, right? You can calculate the hours for why this happened and how you could have followed that through, and it's fine. So what to do is, like I said, if the market comes back again into the daily pivot, if you want to go up, it's okay before New York opens. Like I said, it's Friday, and I don't like trading on a Friday because, we don't know what's going to happen. And then I have to wait for New York, and it's my evening, and it just spoils my whole weekend. So I'm going to wait for this until Monday. Now, SP 500 does have a swing day Monday. So if we hit a high and the market pulls back on a Monday, we're going to check the PST levels to see where we're at for a retracement, because this is due for a retracement. And if it does come back, it should come back lower than this level into there, so it can, have a better buy. So we might have like a few days off the market, kind of like pushing down. And there is a divergence here, as you can see. So the market is slightly higher with divergence, but everybody seems to be happy chappies, and we'll see how things are going with that. But we should have a pullback as well. Also, March is going to be really interesting with indices. And as we get to March, we better be careful. It's going to be a really, really good opportunity in March. So we have to, keep that in mind. All right, remind me as we get there. Let's take a look at Dow Jones. Now, yesterday we were looking at SP 500 and checking out the future days and stuff. And then all of a sudden we saw that March was going to be a quite good opportunity for us to trade. So Okay. All right, let's take a look at Dow as well. Now with Dow Jones, so we might see a high today as well because the swing day, as you can see. So this is Friday. Okay, so that's your Friday. This is where we're at. Okay. And this is also market here, as you can see. We marked this in yesterday. It's all good. No dramas. We're still in a good buy kiss zone here. So that's also fine. And we can get rid of this. That's done. So we're here. Now the first support of the day is 70, which is the price of 44,345. And that is also going to close the gap here on 44,604. 44,604. So a tap into there is also okay. But this is like a beautiful one. If you're following Dow Jones, you see, I'm not following Dow Jones because I only got SP 500 gold and euro dollar on the first chart. But if you're like following it yesterday, then think about it. 140 is going to be 1240. I mean, look at that. That's 1245. That's 1240 bar there. Whoops. And that's it. The market starts pushing up. And then you got 10 past 5, which is 10 past 4 here. I mean, look at that. That is just beautiful. 10 past 4, right on the white line. And then here we are. That's it. And then once it finds direction, it should go to 10 o'clock, I've said. 10 to 11:50 to closing. Well, there you go. Finds direction. Boom. See, that's your call. Market pushes up. In you go. It's found direction. Next thing you know, you're up here. Even, look, even, this is really crazy. But as an experience, think about it. Even let's say you said, oh no, they sold in this bar. Let's say you sold, okay? Your stop loss is just above here, okay? Because that's the high, all right? And then your stop loss gets taken out. Then what do you say to yourself? You say, wait a minute. The direction is up. So then you go in long, okay? And then you just push it up until closing. Now look at what you lost, okay? So let's say you entered a sell here and your stop loss was just above there and you got stopped out. And then you entered long because you know it's going to continue once it finds direction until closing, or like 10 o'clock, 11 o'clock. And your 10 o'clock, 11 o'clock on the platform is 9 o'clock here. That's your 9. And your 10:50 is going to be here because 11:50 and then 10:50 I said, and that's your 10:50, and that's your closing. You know what I mean? So you already, like, let's say you lost $100, but you've made like 400. You see what I mean? So knowing how far it's gonna go, the hours, is important. It's not just about the price, it's also knowing how far, how long am I going to continue this trend up, because that gives you the confidence. Then you're not scared sitting in front of the computer thinking, oh, crikey, you know, what's happening here? Am I gonna die here or what? Okay, so you can just relax and follow it through. So with the Dow Jones as well, it's a swing day, either today or Monday, preferably. I'd rather sell on a Monday. If it sticks around here, hits that level, calms down, great. Then on Monday, we can look for a sell setup. Let's take a look at NASDAQ. This is why timing your trade is so fun. You're just not stressed out. If it doesn't go in your direction, you're not hoping for anything. That's it. And then you can just wait for the next opportunity. Or if you know the trend is going to continue in a direction, then just, that's it, go with it. All right, this is NASDAQ, right in the zone. We're in there, all good. Okay, this could be a 4, So if this is 1, 2, 3, 4, if that's going to be 5, it's not very high, but in any case, we'll see how things pan out on this one. We should have a pullback, shouldn't we? Yeah, nice on the target. Again, just beautiful. So today we might hit that 64, which is 22,043, but on the price, it's already done it. 22,043. So this zone is going to be, again, target. If it hits there and then you want to sell it off at a trading hour, you can. But this zone is also good to sell off. This could turn into, if it doesn't break out, okay, if it doesn't break out, but it starts to push down and we break down, then a push up into this zone again should trigger sells. Okay, because then this will turn into a distribution. You see, it's a tight rectangle, right? So now I want to sell the high, buy the low. If it breaks the low, the pullback is a sell to push down. Then if that happens, then we should, like, push down a little bit, but just be mindful of that target there. And on the monthly, yeah, we're like, to the moon. I said this is looking bearish, but you can see with Trump, we're still to the moon. So we'll play those little reversal days as well, and see how things pan out. March is going to be tricky, but it's going to be well worth it. March is going to be an amazing entry, I think. If what has happened happens again, we should find ourselves in a really, really good place where we can just keep pushing and pushing in one direction from a low or a high. Bitcoin. Well, Bitcoin, there we go. Remember on this one, Tuesday was a swing day, wasn't it? So Tuesday market made the high. Then Wednesday it fell off. And then we had Thursday, Friday swing day for this one. Yep, that's your Thursday. It didn't come down at all. Okay, as you can see, it just did not come down. But I did say it did the goodbye kiss on the weekly, which was that 64.99.728, so which was there. Okay, on the Tuesday it already did that. So today not coming back down is just okay. All right, and the market buying, as you can see, once again, all you had to do is just set yourself up at the trading hours. So 1240 is there. That's your 1240. And then, all right, so then that's 240. We didn't have a 240. We had that one. Okay, and then the next hour was 10 past 4 on the platform. 10 past 4 is on that bar. You see, it's just, and then you're getting to your target, as you can see. You see, once you get to the target, you see how the reaction is, touches it, and then boom down. And then that's it. Once you take your profit, you're out of the game. But this is beautiful because you had a breakout. You see the market's going out. This is why technical analysis and timing together. It just needs to be together. You got your line. Market is broken out. You're on a good buy kiss. It's a trading hour, and that's it. You just enter there. If you enter there, your stop loss should be just under this bar or just under this bar here. It shouldn't, because it shouldn't go lower if your timing is right. You shouldn't have a huge stop loss. Your worst case stop loss is going to be there under the red line. Why? Because it's already broken out. You've got a trading hour, and this is your worst case stop loss if you entered here. And then going up into there, look, from here, if you enter on that bar, this, here we go, it's 99,148, okay, 93,938, okay, so we've got 938 points there. You go all the way there, that's your 380, all right, it's just pretty much 3 times more, all right, more than 3 times, nearly 4, okay, so what can I say? All right, just have to measure it out nicely, and it's a quick measurement. You can see if you have a tight stop loss, you can cover the trade, bang, really easy, and then you can follow the rest up, and then you just have a no stress trade. With Bitcoin, what to do now? Well, that's a question, because today's also a swing day and the market's at the tops. Now remember, I did say these levels, the highs you want to sell, the lows you want to buy, and then it's going to break out either way. And I gave the example of this zone last time. So there is gap here. So if we want to fill in, if the market does want to fill, let's get rid of that so we can see it. Well, it's a small one, but still there's a big one here. So I'm thinking we're probably going to have this sideways market. Then we should have a flush down, and then maybe in March, if that big thing in March happens, then that's the time we're going to go for it. All right, so we'll all get prepared for that one. And that's how it is. Okay, so selling the highs, I'm okay to do that. It's a, time, price, and this is a good buy. It's at 62, so 105, 181, 105, 181 is there. Look, you see, that is precision. Okay, and the market, you see, it's slowed down and stopped immediately. This is why PST is a bingo indicator. Because if you match that to your time, then and if you're trading this, then you say to yourself, let's see, what time do I have today? I've got 10:50, which is 9:50 on the platform. So nothing until 9:50 till, 9:50 until 10:05. And that's it. And then, you put in the other hours and so on, if you're trading it. So it's going to be 150 on the platform for this one. All right, but you see what I mean? It's like just, time and price, you get them together, and all these daily lines are also very useful for us because you can cover the trade quickly. Okay, the purple, yesterday's closing. This is Monday, so you're like opening up, you're like straight in, you can cover the trade quickly. And that's it. Also, if it breaks up, you see the pullback becomes a place where you can get back in again, because that's a line, and you got the gap fill. If you know technical analysis, then you got your gap fill, and then pushing it up as well. So there are options, and when you have timing and pricing together, there are no better options. This really is the best way to trade. So it's a swing day. Be careful on this one. With Bitcoin, because it's on the weekend. So it is a swing day on this today as well. So if that Thursday is also a high, selling again from the highs down is an option. Everybody knows Trump is a crypto fan. It's all good. So market already anticipated that. So that high was already done. Okay. And then, now probably selling into the down is better. So this is going to be sideways. Sell the tops, buy the lows, and in between, be very, very careful, and have a good weekend.